If you believe they sent helicopters and special forces to Caracas just to arrest one man, you're missing the single most critical financial signal of your lifetime. January 3rd, 2026, 2:00 a.m. What happened was not a political operation. It was a bank robbery. And what they took wasn't just oil. 142,000 millionaires are fleeing Western nations right now. Janet Yellen just admitted we've reached fiscal dominance. The U.S. strategic silver reserve is empty. When an empire can no longer buy what it needs, it starts taking. Oil was phase 1, silver is phase 2, and you have less time than you think. Good evening, distinguished viewers. Welcome to Currency Analyzer, where we decode the financial signals the mainstream media won't explain. Now, if you've been around long enough to remember when a handshake meant something, when a dollar was actually backed by something real, when banks paid you interest instead of charging you fees, then you understand the value of reliable information. We don't chase trends here, we analyze patterns, we study history, we connect the dots that others miss. So, if you appreciate serious economic analysis, the kind your financial advisor won't discuss, the kind that protects wealth rather than gambles with it, do yourself a favor. Subscribe to this channel, click that button, turn on notifications. Because in the next 24 months, the information we share here could be the difference between preserving your life as work and watching it evaporate. And before we begin today's critical analysis, tell us in the comments below, where in the world are you watching from? Are you in the United States watching your currency lose value? Are you in Europe seeing your savings eroded by negative rates? Are you in Asia, South America, or the Middle East watching the Western financial system unravel from the outside? Drop your location in the comments. Let's see how global this awakening truly is. Now, let's decode exactly what happened on January 3rd and why it guarantees the greatest wealth transfer in modern history. On January 3rd, 2026, at precisely 2:00 in the morning, the world witnessed something extraordinary. United States military helicopters descended on Caracas, Venezuela. Special forces moved through the streets. Within hours, the operation was complete. The official story was simple. They went in to arrest one man, the Venezuelan leader. But anyone paying attention to the numbers, anyone studying the actual economics behind this operation, understood immediately that this narrative was incomplete. This was not about one person. This was about something far more valuable, far more strategic, and far more desperate. The timing alone revealed everything. Why January 2026? Why now? The answer lies in a number that most Americans never think about, but that keeps economists awake at night: $1 trillion. That is how much the United States government now pays every single year, just in interest on its debt. Not paying down the debt itself, just the interest, just the cost of borrowing. Just the interest, just the cost of borrowing. To put this in perspective, the entire defense budget of the United States, the largest military expenditure in human history, is less than what the government now pays simply to service its credit card bill. The national debt has crossed $38.5 trillion and grows by anywhere from $6 to $12 billion every single day. Every morning, the sun rises on a nation that is $6 billion deeper in debt than it was the day before. This is not sustainable. This is not manageable. This is mathematical insolvency dressed up in political speeches and central bank press releases. So, when military helicopters land in a foreign capital in the middle of the night, the question analysts ask is not who did they arrest? The question is, what did they secure? Venezuela sits on top of the largest proven oil reserves on planet Earth, 300 billion barrels. At current market prices, that represents approximately $17.3 trillion worth of energy. For a government staring at a $38.5 trillion debt, for a government that can no longer afford to simply write checks and buy what it needs, these numbers are not coincidental. They are strategic. It was sold off to manage short-term price spikes. Now, when the empire looks at its inventory, it sees empty storage facilities and a growing realization that the era of easy energy access is ending. This brings us to a framework that historians have documented repeatedly throughout human civilization: the 7-stage empire life cycle. Every major empire in recorded history, from Rome to the Dutch to the British, has followed this precise pattern. The stages are predictable, the outcomes are consistent, and the United States, according to every available metric, is currently operating in Stage 4. Stage 4 is called desperate resource acquisition. This is the phase when an empire realizes that its currency no longer commands the respect it once did. This is the moment when trade partners begin rejecting payment in the empire's money. This is when the mathematics of debt becomes so extreme that traditional economic tools stop working. In Stage 4, empires stop being merchants and become predators. They stop negotiating prices and start seizing assets. The transition from commerce to conquest is not a choice. It is a survival mechanism for a system that can no longer function through normal economic channels. The Venezuela operation was not an isolated incident. It was a signal. It was the empire demonstrating that when dollars are no longer accepted, when treasury bonds are no longer purchased, when the global community begins to reject the paper promises of a bankrupt system, the response is force. But here is what most observers are missing. Here's the detail that connects this military action to the silver market, to your personal wealth, to the decisions you need to make in the next 12 months. Oil was not the only strategic asset that the United States has run out of. The military systems used in that Caracas operation, the missiles, the helicopters, the satellite guidance systems, all of them require another metal. A metal that is more scarce than oil. A metal that cannot be synthesized or substituted. A metal that the United States government sold off decades ago, assuming it could always be purchased on the open market. That metal is silver, and the stockpile is empty. When empires start grabbing tangible assets because their currency has failed, they follow a sequence. Oil first, because armies run on oil. But technology, weapon systems, and modern warfare run on silver. And that is where this story turns, from concerning to critical. There's a document that sits in the archives of the British Museum. It is fragile, yellowed with age, written in Latin. It is a letter from a Roman senator to his son, dated 251 AD. In this letter, the father gives advice that would sound familiar to any modern investor. Do not trust the coins anymore. Buy land. Buy anything real. This letter was written during the exact moment when the Roman Empire entered stage 4 of its collapse. The senator could feel it. He could see the debasement of the currency. He could observe the government becoming more aggressive, more desperate. He did not have economic models or computer algorithms. He simply had pattern recognition. He had seen what happened to empires before Rome, and he understood what was coming next. History does not repeat, but it echoes with such precision that anyone paying attention can hear the rhythm. Empires do not collapse randomly. They follow a mathematical sequence, a 7-stage pattern that has played out identically across civilizations, separated by centuries and continents. The Dutch Empire followed it, the British Empire followed it, the Roman Empire followed it, and now the American Empire is following it. Understanding these stages is not academic exercise, it is survival information, because knowing which stage an empire is in tells you exactly what happens next, what assets become valuable, what assets become worthless, and how much time remains before the system fundamentally changes. Stage 1 is sound money foundation. This is when empires are young, hungry, and honest. The currency is backed by tangible assets, usually gold or silver. A coin is worth something because it contains something. Trade flourishes because trust exists. The empire produces more than it consumes. Wealth accumulates. The stage can last decades or even centuries if managed properly. Stage 2 is infrastructure and public works. This is the golden age. The empire takes its accumulated wealth and builds roads, aqueducts, universities, hospitals, the Roman roads, the British rail systems, the American interstate highway system, all built during Stage 2. The population experiences rising living standards. Innovation accelerates. The empire is at its creative peak. Stage 3 is peak affluence. This is when the empire reaches maximum global influence. Its currency becomes the world reserve currency. Other nations hold it, trade in it, save in it, but something subtle begins to shift. The empire starts consuming more than it produces. Trade deficits appear. The government begins spending beyond its tax revenue. Debt starts to accumulate, slowly at first. The empire is still powerful, still dominant, but the foundation is quietly weakening. Then comes Stage 4, desperate resource acquisition. This is where the mathematics catch up. The debt has grown so large that normal economic tools stop working. Tax revenue cannot cover expenses. Printing more currency creates inflation. Foreign nations begin questioning the value of the empire's money. And this is when the critical transition happens. The empire stops buying and starts taking. Stage 4 empires become aggressive. They launch military operations disguised as peacekeeping. They impose sanctions and seize foreign assets. They violate international norms because survival overrides diplomacy. The Roman legions raided neighboring territories for gold and grain. The British Empire tightened its grip on colonial resources. And now, in January 2026, American helicopters land in Caracas. The pattern is unmistakable. When the United States conducted the Venezuela operation, it was not acting as a Stage 3 empire, confident and economically dominant. It was acting as a Stage 4 empire, desperate and resource-hungry. Thriving empires do not need to seize oil. They simply purchase it. But when the currency is failing, and when trading partners are refusing payment, when the debt has become unpayable, force replaces commerce. Stage 5 is loss of public confidence. This is when the general population, not just the economists and the historians, realizes the currency is dying. This is when teachers, truck drivers, and small business owners stop trusting the banks. Capital flight accelerates. The wealthy move their assets offshore. The government responds with capital controls, making it illegal to move money out of the country. Parallel economies emerge. People begin trading in alternative currencies or reverting to barter. Stage 6 is hyperinflation and social collapse. The currency enters freefall. Prices double weekly, then daily. Savings evaporate overnight. The middle class is wiped out. The army stops accepting payment in the national currency and demands gold, land, or foreign money. Political instability turns into civil unrest. The empire fragments. Stage 7 is system reset. The old monetary system is abandoned entirely. A new currency is introduced, usually backed by hard assets again. Wealth has been completely redistributed. Those who held paper assets have lost everything. Those who held tangible assets, land, precious metals, productive businesses, emerge as the new wealthy class. The cycle begins again. Right now, in early 2026, the United States is deep into Stage 4 and showing early signs of Stage 5. The Venezuela operation was Stage 4 behavior. The 142,000 millionaires fleeing Western nations, that is early Stage 5 behavior. The wealthy always see it first. They always move first. History is not a prediction, it is a map. And that map shows exactly where this road leads. In the year 265 AD, a Roman merchant stood in the foreign marketplace holding a coin. To the untrained eye, it looked like silver. It had the imperial seal, the image of the emperor, the weight of authority. But when the merchant bit down on it, testing its authenticity as traders had done for centuries, his teeth met something soft. Copper. The coin was a lie wrapped in a thin silver coating. That merchant did something that would cascade through the empire like an earthquake. He refused to accept it. He demanded real silver or he would not sell his grain. Within weeks, other merchants followed. Within months, the entire Roman economy was rejecting its own currency. The empire did not fall because of barbarian invasions. It fell because a merchant bit a coin and tasted copper instead of silver. This moment, this precise historical inflection point, is the most important financial lesson that modern investors need to understand. Because what happened to the Roman denarius between 64 AD and 265 AD is happening right now to the United States dollar. The mechanics are identical. The timeline is eerily similar. And the outcome, if history is any guide, is already written. Let us go back to the beginning. In 64 AD, when Emperor Nero held power, the Roman denarius was legitimate money. It contained 94% pure silver. When a Roman soldier received his pay, when a merchant accepted payment, when a farmer sold his crops, the transaction was honest. The coin had intrinsic value. You did not need to trust the emperor. You could weigh the metal. You could verify the purity. The value was in the substance, not the promise. This sound money system was the invisible foundation of Roman prosperity. It allowed trade across vast distances. A merchant in Spain could do business with a trader in Syria using the same trusted currency. Prices remained stable for generations. Inflation was essentially zero. Wealth could be saved without fear of devaluation. This was the Pax Romana, not just military peace, but economic peace. But empires, like addicts, cannot resist the temptation of easy money. Nero wanted to build his golden palace. He wanted to fund endless military campaigns. He wanted to buy loyalty from the Praetorian Guard. But he faced a problem every government eventually faces. He did not have enough money, and the people were already taxed heavily. So Nero made a decision that would echo through centuries. He called in the mint masters and gave them a secret order. Reduce the silver content, mix in copper, make the coins lighter. Turn 10 coins into 12. It seemed like magic. Free money created from nothing. The debasement started slowly, just like inflation always does. By 150 AD, the silver content had dropped to 85%. Most Romans did not notice. The coins still looked the same. They still felt similar. The decline was gradual enough that each generation accepted it as normal. But once debasement begins, it cannot be stopped. It is an addiction. Each emperor needed more money than the last. Each emperor faced bigger debts, larger armies, and more desperate circumstances. By 218 AD, the denarius contained only 43% silver. By 265 AD, it contained 0.05%. It was essentially a copper slug dipped in silver paint. And that is when the Roman economy imploded. Merchants refused the coins. Soldiers demanded payment in gold or land. Prices exploded by 1,000% in a single generation. Wheat that cost 8 denarii in the 2nd century cost 120,000 denarii in the 3rd century. The savings of every Roman family, every veteran's pension, every merchant's accumulated wealth evaporated. The empire did not end because Rome ran out of copper to make fake coins. It ended because people stopped believing in the coins. The loss of confidence was the kill shot, not the debasement itself. Now, transport yourself forward 1,800 years. The year is 1913. The United States creates the Federal Reserve. At that moment, the dollar is backed by gold. It has real value. But within decades, the backing disappears. First, domestic gold convertibility ends in 1933. Then, international convertibility ends in 1971. The dollar becomes pure fiat currency, backed by nothing except the promise of a government. Since 1913, the dollar has lost 98% of its purchasing power. What cost $1 in 1913 now costs over $30. The debasement has been slower than Rome's, spread over a century instead of two, but the mathematics are identical. The government prints currency to fund spending it cannot afford through taxation. But here is where the modern system becomes more sophisticated, more deceptive than anything the Roman emperors could have imagined. Today, they do not just debase the physical currency, they debase the perception of scarcity itself through something called the paper-silver market. On the COMEX exchange in New York, silver trades every day. Contracts are bought and sold representing millions of ounces. But here is the critical detail that most investors never understand. For every one physical ounce of silver sitting in a warehouse, there are estimated to be 100 to 500 paper claims on that same ounce. This is the modern equivalent of mixing copper into silver coins. Instead of diluting the metal, they dilute the claims on the metal. Banks sell certificates promising silver delivery, but they sell far more certificates than they have silver. It is a fractional reserve system applied to precious metals, and it serves the exact same purpose it served in Rome. It allows the empire to artificially suppress the price of the strategic metal while continuing to fund its deficits. The current price of silver, approximately $80 per ounce, is not the price of silver. It is the price of a paper promise that represents silver. It is the price of the debased coin, not the real metal. And just like that Roman merchant in 265 AD, the market is beginning to bite down and taste copper. Physical silver premiums are rising. Delivery times are extending. Bullion dealers are running low on inventory. These are the early warning signs that the paper system is approaching its breaking point. And when confidence breaks, when enough people demand physical delivery, when the gap between paper claims and physical metal becomes undeniable, the price discovery will be violent and swift. History does not whisper, it screams. The denarius collapsed when people stopped believing in it. The dollar's fate is following the exact same script. There's a private airport outside of London that, until recently, serviced an average of 12 private jets per day. In the first week of January 2026, that number jumped to 187. The flights were not vacation trips, they were one-way departures. Wealthy families, entire fortunes packed into luggage, leaving permanently. The staff at the airport noticed something else. None of the passengers were talking about where they were going. They were only talking about what they were leaving behind. This scene is repeating itself in New York, San Francisco, Paris, and Frankfurt. It is not a trend, it is an evacuation. According to the latest global wealth migration reports, 142,000 millionaires are currently in the process of relocating from traditional Western financial centers. This represents the largest private wealth migration in recorded human history. And it is happening right now, while most people are watching television and assuming everything is normal. These are not ordinary wealthy people making lifestyle choices. These are the individuals who have private meetings with Treasury officials. These are the people whose wealth advisors have access to information that never reaches the general public. These are the insiders. And they are running. The trigger was a single phrase spoken 5 days ago. On January 5th, 2026, United States Treasury Secretary Janet Yellen used a term in a press briefing that made every economist in the room go silent. She said, the United States was approaching fiscal dominance. To most people, this sounded like meaningless government jargon. To the millionaires, it was a fire alarm. Fiscal dominance is a technical term that describes a nightmare scenario. It means the government's debt has become so massive that the central bank has lost control of monetary policy. It means they are trapped. If they raise interest rates to fight inflation, the government cannot afford the interest payments on $38 trillion of debt and goes bankrupt. If they lower interest rates to help the government, inflation spirals out of control and destroys the currency. There is no solution. There is no policy tool that fixes this. The only option remaining is to print currency at an accelerating rate, inflate away the debt, and hope the system does not completely collapse before some new arrangement can be made. But the millionaires understand what this means for their bank accounts, their portfolios, their dollar-denominated wealth. It means vaporization. So they are moving. They are buying golden passports in Caribbean nations. They are purchasing citizenship in countries with stable banking systems. They are acquiring farmland in South America, bunkers in New Zealand, and precious metal storage in Switzerland. They are converting paper wealth into tangible assets and diversifying out of the jurisdiction of the United States government. Because they know what comes next. They know that when stage 5 hits, when the general public begins to panic, the government will impose capital controls. They will make it illegal to move money out of the country. They will freeze bank accounts. They will confiscate assets. History shows this pattern clearly. Argentina did it. Greece did it. Cyprus did it. When governments become desperate, they turn on their own citizens. The wealthy are escaping while the exit door is still open. But for the average person, for those without millions to buy foreign citizenship, there is a different strategy. There's an asset that functions as a portable, unconfiscatable store of value that does not require a private jet or a foreign bank account. That asset is physical silver, but here is where the story takes a darker turn. Here is where the Venezuela operation connects directly to your personal financial survival. Because the United States government is not just running out of dollars. It is running out of something far more critical to its military and technological infrastructure. It is running out of silver. Every Tomahawk cruise missile that was launched, every Apache helicopter that flew during the Caracas operation, every satellite that guided those forces, all of them are dependent on silver. Silver is the most electrically conductive metal on Earth. It cannot be substituted in high-precision military applications. The guidance systems, the radar, the communications equipment, none of it functions without silver components. The same is true for the technology sector. Every solar panel being manufactured requires silver paste for conductivity. Every electric vehicle contains silver in its electronic systems. The 5G network infrastructure, the data centers powering artificial intelligence, the quantum computing systems being developed, all of them consume silver at an accelerating rate. The United States military-industrial complex uses an estimated amount of silver each year that remains classified, but independent analysts believe it is substantial. And here's the strategic crisis. The United States Strategic Silver Reserve, which once held billions of ounces, was liquidated decades ago. The government sold it off, assuming silver would always be available to purchase on the open market with dollars. But the open market is changing. China, which controls significant silver production, recently implemented export restrictions on strategic minerals. Russia, a major silver producer, is no longer selling to Western nations. Mexico and Peru, the two largest silver-producing countries, are increasingly aligned with the BRICS economic alliance. The United States now imports approximately 70% of the silver it consumes, and those supply lines are being cut. So the Department of Defense looks at its inventory projections and sees a terrifying timeline. Within 12 to 18 months at current consumption rates and declining imports, the military will face silver shortages that impact weapons production. They will not be able to build missiles. They will not be able to manufacture the electronics that modern warfare depends on. What does an empire do when it realizes it is running out of a strategic material that it can no longer buy? It does exactly what it did with Venezuelan oil. It takes it. And before they send Marines to seize silver mines in Mexico, before they launch another foreign operation, they will do something much simpler. They will nationalize the domestic silver supply. The Defense Production Act gives the government authority to requisition materials deemed critical to national security. One executive order could redirect all domestic silver mining output to military use. One policy change could make it illegal for civilians to purchase investment-grade silver. One announcement could shut down the bullion market overnight. And here is the price discovery mechanism that guarantees $200 silver, possibly much higher. If the Department of Defense needs to acquire 100 million ounces immediately to rebuild strategic stockpiles, they will pay whatever price is necessary. National security does not have a budget constraint. They will outbid Apple, Samsung, and every solar panel manufacturer. They will outbid every investor, because for them this is not about profit, this is about survival. The current COMEX price of $80 reflects a paper market that is completely disconnected from physical reality. It reflects a system where 500 paper claims exist for every 1 real ounce. But when the government enters the market with unlimited purchasing power, when industrial users realize supply is vanishing, when investors understand the paper contracts are worthless, the price will not rise gradually, it will gap up violently. The Romans who held debased denarii lost everything. The Romans who held physical silver and gold preserved their wealth through the collapse and emerged as the elite of the next era. This is not theory. This is documented history. The pattern repeats because human nature does not change and the physics of empire collapse do not change. Right now, in early 2026, physical silver is available at pre-crisis prices. This window will not remain open. The millionaires are already moving. The government is already seizing foreign resources. The timeline is measured in months, not years. The greatest wealth transfer in modern history is not coming. It is happening right now. The only question is which side of that transfer you will be on